All right, let's take a look at what is trending after hours here. We have three names for you. We have Caesars, Palo Alto Networks, and also Toll Brothers. Kicking it off with Caesars, we're seeing that stock under a bit of pressure, off just about 1%. The company reporting a wider than expected loss. Sales, though, did beat for its most recent quarter, coming in at $2.82 billion. Las Vegas same-store net revenue was up 11% on a year-over-year basis, $1.15 billion. You're looking at gains of just about 5% over the last 3 months. Year to date, the stock has regained a lot of its momentum, up just about 23% as some of the buyers have come back into that picture. But again, in extended trading, Caesars off about 1%. Moving on to Palo Alto Networks, that stock up nearly 7% in extended trading. Adjusted EPS coming in at $1.05. Strong revenue, also bookings here, one of the big drivers in the after hours action. We've got revenue of $1.66 billion. Billings coming in stronger than what the street was looking for, $2.03 billion. Estimate was for $1.96 billion. Obviously, that's good news here for Palo Alto Networks. Year to date, you're looking at gains of just about 19%. Over the past year, though, the stock hasn't trended, I guess, the big takeaway, it's not too far from the flat line, although we have certainly seen a lot of volatility in that name over the last 12 months. Over the past year, you're looking at gains of nearly 4%. And let's round it out with Toll Brothers. The latest reading on the home builders on the real estate sector. We're looking at gains of just about 2.5% here in extended trading. Profit rising there, the company beating on both the top and bottom lines. We're looking at revenue of $1.78 billion. The estimate was for $1.74 billion. Adjusted home sales, the gross margin there also coming in better than expected, 27.5%. The estimate was for 26.7%. Over the last 3 months, looking at gains of just about 23%. Year to date, a little bit of shorter term chart there, gains about just around 12%. So certainly some buyer enthusiasm has returned to the home builders. And all in all, Dave, when you take these results and everything that we have heard from the sector and lump it all together, home builders, I think, are faring a lot better than many had initially feared. Strangely.
I actually thought they'd have a tough start to the year, but they have mostly started well, although all of them, really the big home builders, down today. Diving inside the release a little bit, contracted homes down 50% year over year. Homes in backlog down 32% year over year, but home sales revenues up 4%, largely because income from gross margins up 190 basis points year over year. And some interesting commentary from their CEO that really actually surprised me. Since the start of the calendar year, we've seen a marked increase in demand beyond normal seasonality. As buyer confidence appears to be improving, we believe the recent pickup in demand is a sign that the long-term fundamentals underpinning the housing market remain intact. So listen, that's just one of the big home buyers, but that is a pretty optimistic view at the big picture in the real estate market. All those dire predictions just never really came to fruition. And though you have conflicting opinions on whether the worst is behind us, largely speaking, it seems like they've all weathered the storm. Yeah, they have weathered the storm, and they have pretty optimistic outlooks. You just mentioned the comments there from CEO Douglas Yearly, but also when you take into account the home builder confidence index ticking back up, a huge jump that we saw in the latest reading just really points to the fact that many of them are more optimistic about the improvement that we could potentially and hopefully will see within that sector over the coming quarters. Like you're saying, lots of debate about how big of a jump or how big of a, how quickly maybe we could regain some of that momentum, but it seems like the worst of it maybe hopefully has been averted, at least for now. Yeah, but if you want one number that tells you the inventory story, contracted homes down 50% year over year. Yeah.